While external reserves, that's Nigeria's external reserves at the moment, are at their highest levels since 2009. It's reaching almost 51 billion US dollars, despite the Naira's slight depreciation in some segments of the foreign exchange market due to weaker dollar inflows. Now, the Central Bank of Nigeria's data shows that the foreign reserves increased to $50.96 billion as of June 17, 2026, from about $37.74 billion recorded in the same period last year, an increase of $13.22 billion, or about 35.03 percentage points. Now, the current level represents the highest in over 15 years since 2009, bolstering the CBN's capacity to fulfill its international payment obligations, support the nation's local currency. Meanwhile, total turnover at the NAFEM window rose by 29.25% to $378.3 million as at June 18 from $292.7 million recorded on June 17th. Now, weekly turnover of the official market reached its $2.56 billion. The International Monetary Fund has said Nigeria's flexibility or flexible exchange rate mechanism was inappropriate. The IMF says this is appropriate, I beg your pardon, and said in a certain context that CBN may intervene with their actions in the market. Yes, the IMF, the World Bank have commended the Central Bank of Nigeria with regards to all efforts aimed at, increasing the reserves, increasing stability in the currency, and all of it. But let's get to talk now. My guest is Dr. Biodun Adedikpe. He is the Chief Consultant at B. Adedikpe Associates Limited. He joins me virtually for this conversation this afternoon. Good afternoon, Dr. Adedikpe. It's good to have you join the show.
Yeah, thank you so very much, Tolu. A very good afternoon to you, and happy to be with you this afternoon.
Thank you very much. Well, I think it's good news when we hear that reserves are hitting so high, stability around the country, import basis and all of it. But let me allow you, how did we get here? We knew where the net reserves were. We knew where the foreign reserves were before 2023. But today, see where we are. How did we get to this point? What is being done right? And how do we sustain this?
Right. Very good point to start from. And this also has an historical context in the sense that if you look at the Nigerian economy, historically, pick out the three major macroeconomic prices, as I like to call them. And that is, you talk about the exchange rate, you talk about the inflation rate, and then, of course, you talk about interest rates. Some 24 years ago, I was invited to do an interrogation of these three vis-a-vis the Nigerian economy by the central bank. And the question then was, which of them is most fundamental that in managing our monetary policy and the economy, we should give more attention to? And the data and evidence available then made it very clear that exchange value of the Naira is fundamental, because anytime there's a shift in that, every other thing changes, including your GDP US dollar, which means if the Naira weakens, even though you are working very hard, you are growing your Naira GDP, it will contract in dollar terms, which means it's very fundamental. So the same thing still applies today. So the question is this, as you said, what did we do right to bring us to where we are? I think the starting point was the fact that we unified the exchange rates. And why will I say that? Now, by taking that step, the government removed what I describe as strange arbitrage opportunities in the market, which means if you have a very significant difference between the roadside rate of exchange and the official rate, we call that, premium. If it is very significant, it becomes an incentive for round tripping. So now, by unifying the exchange rates, we eliminated, number one, multiple rates in the official window. Secondly, we also contracted that premium that was an incentive to round tripping and all manner of, let me call it sharp practices. So now, that was the first stage. The second stage was when the Central Bank of Nigeria introduced the electronic FX management system, which of course brought efficiency, in which case proper price discovery began to happen at our official FX window, in which case the market was now largely driven primarily by the interaction between demand and supply, and of course every other factor that make exchange rates to move also were left to drive the rate as the market responded to them. So that brought some confidence, very important, not only in the participating banks and institutions, but also all other participants in the market, whether they were local or foreign. But the central bank also followed up on that with the FX code. Of course, what that did in my interpretation is that while FMs dealt with efficiency in the market that helped price discovery, the FX code incentivized and demanded right behavior by the participating banks and institutions. So with that, we now saw a combination of efficiency and effectiveness. Then, of course, a very strong indication, that's my next consideration here, of a disclosure that central bank has gone orthodox in terms of monetary policy, which means what we saw before then and described on occasions as mission drift will no longer happen. So then the question we ask is, what is orthodox monetary policy? That means the things generally considered as, number one, the price of credit, the cost of credit, and of course the value of money. So that takes us back to inflation targeting as the primary mandate of the central bank. So all that is we therefore follow. Now, going beyond that, the central bank also introduced something that was first initiated by the Bank of Japan, so 26 years ago. We call it policy guidance. Okay, central banks, in the light of crisis, have tried so many policy tools. Okay, quantitative easing, qualitative easing, policy guidance, and so on and so forth. So, but we saw that also introduced in Nigeria for the first time under this regime, in which case there's an assurance to market participants. For example, CBN governor said that given the data and what is happening now, there is no reason to devalue the naira towards the end of this year. So that enabled economic agents to plan with the current exchange value of the naira. But how do I convince myself? And then looked at the data. The naira had been relatively stable within a narrow band from November 2024 up until date. So I can now say, okay, this is June. We are looking at 6 more years, that the second half of this year, for the year to run out. That now brings us to our external reserves. So all of these factors, and the fact that also the non-US export sector also grew strongly. So that also is a fact in it. So our trade balance went from negative in May 2023 to a very strong positive as at the end of May 2026. So that also impacted what we see there. Now, with the confidence given to investors, we now could see investors, domestic and foreign, now investing in our financial instruments, treasury bills issued by the government, bonds issued by the government, and of course the stock market as well, which shows the performance of all those instruments. So yes, some will argue that yes, mostly foreign portfolio investment, it's good on one hand, because what that does for you is that FPI responds to business confidence. And of course, that has been at a very good level for us, above 50, the PMI, okay? In the last, maybe we talk about, well, it was above 50 most of last year, then dropped in January, February, but from March to date, it has been above 50 steady. So all of these coming together helped us to build our external reserves. So that is where we are today. But we can now interpret what it means for us and, of course, the rest of the world that are stakeholders of the Nigerian economy.
Deep one. But looking at sustaining this, I talked about that. We've seen that stability now in that market. But moving on, there's this, how do you put it, attracting investments. Many will say we are supposed to attract investment when we have stability with our reserves and all. But we still continue to get more of portfolio guys coming in, not the guys coming with the FDIs that will stay in. That has also been an argument in one side. Now, what are those things that you think needs to be done to attract foreign. When are we going to start to, because we saw figures from capital importation, we saw figures coming in last week and all of that. So when are we going to balance this up?
Excellent, perspective to the conversation. Now, as we speak, to the best of, our knowledge and data available, there is now some traction with FDIs. But of course, we won't see this until the data is officially released. Which means, yes, FPIs are still strong because don't forget, this is a pre-election year. Typically, investors will look at where we are today, number one, where are we likely to be by the time the elections are held next year? Is there a possibility of a major shift in policy? So, number one, they take advantage of the fairly priced financial instrument. And I'll put it in two ways. Number one, the CBN ticked up the treasury rate to about 17.3%. So that made it even more attractive to investors. That will, of course, attract more FPIs, okay, and even domestic investors into that instrument. That's on the one side. But the other side is the monetary policy rate, MPR, at 26.5. There is no indication yet that CBN will take this anywhere below 20. Even though at the beginning of the year, when we did the outlook, we saw a window for monetary easing for Nigeria because inflation rate has been trending downwards. But when the Gulf conflict began on February 28th, we saw prices begin to go up all around the world. Inflation rate ticked up, and we explained that in Nigeria. The only thing for us in Nigeria is that the rate of increase in the inflation rate was not as massive as what we saw in other countries. So given that central bank certainly will be tentative in reducing MPR, rather like they did at the last meeting of the MPC, the rate was held, which is what is happening all around the world anyway. So if that is the case, investors want to pile in into the very attractively priced Naira instruments. And that is what we are witnessing now. So that even at that, at the business environment, confidence remains very high. And then we see improvements also in infrastructure. That is something oftentimes we ignore. New roads being constructed, old ones being rehabilitated, all of this coming together is improving the environment for logistics. Of course, new investments in the ports, okay, is equally improving logistics for goods and services. Now, with all of this, the business and investment environment is improving. And so we see now Nigeria being more attractive to FDIs than we had been hitherto. Now, if this is sustained, then looking forward between now and end of the year, I don't see, unless, like I normally say, there's a thunder strike. But without a thunder strike, that is a major disruption that affects everyone around the world. I don't see a reversal of the trend we are looking at now. Rather, I see deepening. And in fact, FDI is also increasing. That is what I see going forward as we are.
Well, great stuff. Despite the tight monetary policy also being instituted by the Apex Bank, we still see private sector credit rising to about 81.04 trillion, the figures we saw just recently in May 2026, reflecting an increase despite this tight monetary policy. Why do you think that is also happening? What is happening in your own thoughts with the real sector now, considering interest rate issues, Middle Eastern crisis? We know that they are all having to re-strategize. Even directors are re-strategizing and MDs.
Thank you so very much. That's a very, very good question that also speaks to strategy. If you notice, most medium to large enterprises in Nigeria are making more money. Okay? So because already we're in an environment where the cost of money or the price of money, that's interest rates, is elevated. It's been like that for a number of years. So to anyone designing strategy for a corporate entity, that is not new. So it is taken as given in designing your strategy. So what you'll be worrying more about is, how do I produce at a scale and also design marketing strategies that will enable me achieve what I call marketing effectiveness. That one I put in 4 stages. First is for the market to be aware of your brand. Second is then to be aware of your product. The third one is to understand that your product can solve their problems. The fourth and final stage is for your brand to be attractive. Attractive is such that they choose to buy your product. If you look at the data, now, latest data on FX utilization by manufacturers, to it will surprise you that in the last 1 year, that's 2025, manufacturers received over $26 billion. Okay, so question then, if they achieved, as we commonly see also in available data, a little over 60% capacity utilization, that means they are still in business. A good number of them are still producing. The market that we commonly say, oh, is weak, is still there, absorbing what they produce. So quick means then that the high interest rate, elevated, I said earlier, is already planned into the strategy. Secondly, we talk now about the cost of borrowing. The exchange rate of the naira, stable within a defined band. So once you have those indications, it is easier for you to plan. Even when you are planning for uncertainty and you adopt the tool of scenario planning, you can still thrive in such an environment. That is, in my view, what is playing out here. Because the soundbite we produce about the environment is different from the outcomes and results of our operation that we witness.
Another good one. Well, moving forward now, you've touched on that very important issue. It's an election, pre-election year, and everyone is talking about that, thinking that maybe governance or focus will shift from governance to politicking and all of that. At this time where there's a bit of recovery, what do you think? Do you think that attention will shift from economic issues and all to politicking? If that happens, will that not affect our expected projection, Dr. Dedikpe?
Well, I see different, and I tell you why. The Nigerian population is today more politically aware than it was 4 years ago or 8 years ago, because we've been tracking in our firm every pre-election year since 1998. We've been tracking to date. So, and we've seen that awareness improve significantly, such that now more, people look forward to your scorecard than what to bring out as your promise. So in which case, I'm very sure that the government of the day is aware that the evaluation the electorate will make of their government and why they will make a decision to vote for them will be based on their performance. So to that extent, therefore, I expect a shift from what we knew historically to that of we have to keep running until we get to the point where people have to now choose either to vote for us to remain in office or vote for somebody else. So I think we see a departure from that historical pattern of leaving the economy on autopilot while we now go politicking. It's going to be different this year. And of course, what we also get as, feelings from major players and even foreign investors, interestingly, the way most of them are coming in and taking positions is somewhat indicative that Nigeria has achieved a level of reforms where, as assured by the government of the day, that there will be a reversal. So we can bank on that. And that is our interpretation of what we are seeing playing out, which also informed my remark earlier on, that when we see the next data on capital importation, it will be an interesting one to see what we see there under FDIs. So I see a departure from the history in this regard.
Again, before I let you go, what would be your projections for coming inflation figures? Yes, I know we still have a few days to end the month of June, because that obviously will shape the direction of the MPC meeting for the month of July. If we continue to have elevated inflation, globally inflation is also increasing, one side by side somehow. Do you think that they would hold on? They would. What do you make of that, Prof?
Well, my expectation in terms of inflation is that the rate for June will dampen a little compared to May. And why is that so? If you look at the rate of increase since March, it's been slowing down to May. So it then means that my own expectation is that the rate in June will likely be slightly lower than 15.93% we saw in May. And given that also, whether there's a little dampening or not, I don't expect FPC to now think about rate cut. They may likely, at the best, still hold the rate at their next meeting.
Professor Biodun Adedipe, Chief Consultant, B. Adedipe Associates Limited. Thank you so much for your time on the show. It's really good to see you as always.
Always a pleasure. Thank you for having me.
All right, sir.